Hi, welcome to this week's Big Picture. This is Kim Watson speaking. So let's just run through these markets very briefly. I do realise that obviously we're a short week this week with yesterday's bank holidays in the UK. We've got bank holidays later on in the week for Europe. So let's just run through these. US. As we've said for some time, no increases. In fact, we've got a reduction of interest rates actually priced into the markets, but there was a small edging towards a hawkish sort of picture that's running through at the moment, with that they're neutralised and they may be at the right sort of levels. Based on this, asset managers increase their holdings, although hedge funds continue to decrease theirs slightly, both positive still, but maybe, as I say, a slight more warmth towards the US dollar. Now, following through, trade talks are still on hold, and I'm just reading backwards and forwards the sort of comments that are going on between China, tit for tat sort of comments coming through. Not really getting too much, but I'm sure at some point the talks will resume. But until then, it leaves the S&Ps on a more of an edge, really. Now, this week, what we've got coming out, we've got a very late prelim GDP data coming out on the 30th. That was delayed because of the closure in the US offices there. And we've got core PCE and personal spending. So really looking at the inflation data that's coming through here, looking to see if it's edging up, reasonably bullish. Well, maybe. Retail sales weren't that good, so personal spending here will be watched quite closely to see how consumers are spending in the US. So no real change here. The weekly and daily trends are still pretty bullish for the US dollar index. Moving through, euro dollar. Euro, it remains on the softer side of things. Consensus is emerging for new long-term loans, okay, data dependent, etc. Nothing changed too much there. Have a couple of weeks before we get the next ECB meeting. Looking at the asset holdings, they've been reducing of the long side, and the hedge funds are actually reducing their shorts slightly there, so a bit of a to and fro there going on, but certainly there was quite a significant increase in short positions. This week, well, we've got the final election results coming out today, maybe running in tomorrow. We've got German prelim CPI. That's about it for the week. Nothing much there, and of course a bank holiday. Real forecast, I say forecast, the trend here on the euro is certainly on a weekly and daily basis. It's still pretty much pointing south. May get a bit more bounce. I'll talk about that in a moment. The pound, well, Brexit dependent on any base rate changes here. We've gone really negative now, and I've just sort of highlighted that with a deeper colour of pinky something or other. I don't know what it is, but certainly looks bearish in terms of the sentiment from the bigger traders here. Both asset managers and hedge fund managers now have gone bearish. That's it's quite a significant move, which tends to see things maybe continue rolling over, and it's really a confirmation of the move that's already there, I would have suggested. Where to this week? We're on the road to nowhere. I don't think we're going to see anything resolved or anything else, so we're probably there's no significant economic data coming out, so we're left purely to the technicals. It may mean that we stay in smaller ranges, but as I said, I don't think there's any further Brexit details going to be carried out in the next week or so, and I expect on that basis that these trends on the pound of the downward trend in the weekly and dailies may well continue. Dollar yen, it remains the risk currency, the go-to currency in risk. Nothing in terms of interest rates, no major data out this week. The only thing we're really looking at is quite a bit of choppiness on the weeklies, although that looks like it might be switching over on the trend. As is the daily, it's already switched on the trend there. Um, Unloading their short positions here for both asset managers and hedge funds, that continues. It's reduced once again, so that seems to be, as I said, the go-to, and we could see further strength in the yen, which will see this trend continuing to the downside potentially. Right, Aussie dollar. Okay, as with the New Zealand dollar, I'll cover these almost off together. Both likely to have reductions next time. Both have got money going into the short side from the asset managers, and both have got money coming just slightly gone positive there on the hedge funds. So the hedge funds and the big money managers aren't necessarily agreeing here, but it may be just a nimbleness of the two there. So both likely to eventually switch back when they're probably got a bit of profit, and we could be seeing a bounce. There's some technical reasons which we'll come on to in a moment. Certainly New Zealand dollar, it outperformed some of the markets last week with a little bit of a bounce there in the end, and Aussie dollar may do similar. Canadian dollar, okay, for this week then we've got the Bank of Canada rate statement, so this will give us a bit more of a view on here. The markets are certainly turning to look for more of a hawkish tone there. Not necessarily an increase, certainly not an increase, but there is an expectation that rates may be look to be increased next time, and it may still continue. They're sort of still on that sort of a curve. I think that maybe dropped. Anything that sort of drops that and doesn't come quite so hawkish could see the CAD selling. But it may eventually get it out of its tight range. I mean, I've left the long-term picture there. It's US dollar CAD pairing is still bullish, and the daily, well, it's been chopping along like a good one, not really giving us too much in the way of idea here. But this may be the catalyst that eventually gets us out of it. And finally, last but not necessarily least, the money into the S&P. This is the E-mini 500. We're continuing to see the asset managers reducing their net long positions. These are dropping all of the time, quite significantly now. And the hedge funds, they've geared up and done the same. So in the daily trend, it looks negative. It looks like it could well be, until we get something sorted out with the Chinese talks, etc., that this too would remain on the more bearish side. So there we are. Not anything majorly surprising there. Certainly, as I say, cables moved down in terms of the listings down to that sort of lower group. I think I had it in there last week anyway, in terms of the third tier. First tier still stays with the pound. Euro could sit there in the second tier a little bit, and maybe the yen could stay in the first tier, maybe first or second tier there. So still one of the stronger pairings. In fact, at the moment, I couldn't really put these. They can only be really in the third tier, because I think these are really, and the pound here, are really sitting there in that point where they could easily just roll again. So I wouldn't like to. There's fundamental flaws in the Aussie and New Zealand dollar at this stage. So the stronger pairing really is the US dollar, maybe dolly, and also the yen. So the cross pairs with those may be working equally as well. The actual cross pair themselves may get a little bit switched off. In fact, the yen is maybe slightly stronger, as I say, than the US dollar of late. Right, that's looking at it there. Let's just go and have a quick flick through the technicals on these different markets, starting off with the weekly on the euro. You can see it's still dipping down, rolling it a little bit more by the looks of things this week already, down to its weekly pivot, looking like it could have further downside. Still lower highs, lower lows in this all in all, so weak, and opportunities to sell into any rallies really. The pound, again, similar position. I'll show you the weekly just for the hell of it if I can. There we go. Still in this sort of downward trend here, lower highs, lower lows flicking through there, and on a daily basis what we've got well, I'd like to see, well, I said like to see, I don't really like to see it at all, but we may see a rollover even towards that 125 area. But don't forget, we've got new pivots coming in a few days, next week actually. So well, maybe we've got the rest of this week to run out. It's already through the daily pivot. It's below daily pivot, weekly pivot rather. To me, it still looks weak, and it may stall a little bit. But as I said, it provides, well, should provide me opportunities to sell into decent rallies. Yen, well, yen's sitting here really not doing too much. Range on this 40 pips a day. With the euro, it really gives a little in the way of hope. But for swing traders that are looking for something more, maybe any rallies that sort of run back even towards that daily 21. Let's have a look at the bigger picture here. It's really out the bottom again from where it says, but anything that sort of runs back into resistance, any resistance really almost, may provide more of a swing position over a number of days. I'm not suggesting that swing position would give you any great moves, but it may make up for about a day's normal trading. Aussie dollar. So Aussie dollar there, bit of a bounce towards the later part of last week. Thursday, Friday pitched up a little bit there, still short of its daily 21. So I would be looking almost to sell towards that point. It's I'm just looking. There's nothing obvious there, so it really would, as I said, would give me maybe a possible sell point. But again, with this sort of when you look at the average true range here sitting down at 42 pips, you may be wanting to or needing to hold it for some time. Okay, Aussie dollar, I will look at the New Zealand dollar as I've spoken in the same breath earlier on of these two, and a similar picture here. Solid downward trend. I mean, you don't really need to see the weekly to see it's in a solid downward trend, but it may show you that there are some previous lows there, and also from looking at the weekly you can see that little hammer that's there, so maybe it's got a little bit more upside in it if it was to pitch up. Well, short term, that daily 21, I don't think it's ever really may have been hit back in April, but that may in itself provide a sell point if it gets there. If that fails, well, then I would leave it standalone and see if it pushes up higher, or indeed just get somewhere in between those sort of areas. But again, it may provide a short position eventually. Canadian dollar, the oil price helped it for a while, but it's not really helped it that much because we're sitting back in this range, and as I said, I think we just need to wait until the 29th, so it's tomorrow, for the data to come out on here, and it could shape up things for the near term. We've already seen a break on my trend line I drew in there. Saw that last week. It never managed to close below it, just managed to pitch it and pull back. Maybe if a close below that would be more of a bearish signal for the US dollar stroke CAD. Anything that's too dovish here may just well see us pushing back up towards those prior highs there at about 136.43 possibly. I don't see it moving massively other than something of a surprise. Okay, and finally S&Ps, he says, and well, S&Ps, let's just look at that weekly picture because I just want to show you where the trend lines, I say trend lines, where the key moving averages are. The weekly 21 price has been sort of stabbing through it. I think if it comes through it a third time here, if it can't hold, well, that weekly 50 looks like a half decent target. Looking from a daily perspective, it looks to me relatively bearish. It's sort of I'm sorry, my pivot's on here. I'm going to squeeze it back a little bit here. And I know some people say, "Would you put those lines on there because they give such good support and resistance?" That's why I've got those lines on there. They're pivot levels. They're brilliant, and you can see that how support and resistance they provide through these markets. I won't go through it now, but they're certainly worth having on there, particularly even these bigger picture, and particularly with S&Ps. That's where it's the S&P pits where the traders started using them. Anyway, from where we're sitting at the moment, I still, well, we may pitch up, have another inside day here. It doesn't look like it's going to be charging off at the moment. If it does, well, maybe I would look to sell back into the daily 21. that daily 50 is flattening out. Maybe that would become a resistance point if the price pushes up there. I think we need something more than hope to get it up there at the moment, and I think there needs to be some action in the Chinese talks there, maybe, to get that moving. Otherwise it's going to just flounder, maybe get into range bound, but for the moment I'm looking to see if it will trade back towards those prior lows there, and maybe even push further down. That's it for me. I wish you a great week, a short week as it may be now, and I'll catch you next Monday. Bye for now.